Good morning. Today is Tuesday, December the 5th, and the time right now is 9:40 in the morning. And overnight, we can see equity prices starting to ease off a little bit. We can see that there was hardly any activity in equity markets per se, but this is going to be an important week because we have a series of high important and high impact economic data that will be released this week. Now, over in the micro E-mini Dow Jones futures, we can see the high traded last Friday was 36,338 in the futures contract, and this is not that far away from all-time high of 36,832, which was last traded in January of 2022. And this is by far the most likely index to actually breach into a new high as far as we can see. However, the immediate resistance level is likely to be centered around 36,564 to 36,832. Now, if this market in the Dow Jones actually traded to a new high, do watch out for a key reversal pattern very similar to what we saw in the gold market that we saw last yesterday. We knew that gold actually traded to an all-time high but closed weak on New York, creating a key reversal pattern in the daily time frame. However, do watch out for something similar in the Dow Jones futures if and when the market took out a new high. And in the S&P 500, the high traded again remains unchanged last Friday as 4,607 and three quarter. Again, this is not that far away from the all-time high, which is traded in January of 2022. That level is 4,808 and a quarter. Obviously, when compared to the Dow Jones futures, the S&P 500 futures appears to have some distance to cover before it can even come close to flirting with the all-time high that was traded at 4,808 and a quarter. So last night, the market was very, very tame. The market actually eased off a little bit, but again, there's nothing to talk about because this easing back is anticipation of course, this weekend, this Friday non-farm payroll. Tomorrow, we're going to see the release of the ADP private employment numbers, and of course, this will be the first labor number to have to give an inkling as to what the non-farm payroll may look like on Friday. Top side for resistance in the S&P 500 futures is about 4,619 and a quarter to 4,634 and a half in a micro E-mini S&P 500 futures. On the downside, support is likely to be centered around the 4,005 levels. So do watch out for a ease back into these levels. In the Nasdaq 100, now Nasdaq appears to be in a little bit of a trouble. While it did not register a new high. In fact, the high traded was actually midweek or last week at 16,207 and three quarter. And last night it actually broke a what I would think to be a psychological level at 15,835, even in the futures contract. Although prices stays and close above it, but I think structurally speaking, there is that risk that we can see further losses in the Nasdaq 100 futures. Of course, when compared to the all-time high, which was traded even earlier than the Dow and the S&P 500, the high traded was November 2021. That level is 16,767 and a half. Again, you will have to travel quite a distance to actually flirt with that level. So right now, based on the three major equity index, the Nasdaq 100 appears to have overshot itself and maybe now appear to be a little bit weaker compared to the Dow Jones. So do look out for further losses in the Nasdaq 100. And if this result in further losses, it could change the structure of the entire rally from 14,136 and a half, which begin in November. So we can see the prices is in a very comfortable place, and the market are expecting a Santa Claus rally. And for that matter, I think there's a good chance they may just get that Santa Claus rally. And in the Nikkei 225, you can see Nikkei has beginning to ease off. The high traded is 33,870, which is not that far away from the year high at 33,950. So we can see this market now is pulling back in a three wave, and it appears to be accelerating to the downside, and it's fast approaching the first layer of support at 32,670 to 32,800 in the Osaka futures contract. So do look out for this level to at least temporarily provide some kind of relief and support. And over in the Hang Seng continued to drift lower. In fact, it actually took out yesterday's low. Yesterday's low was 16,744 in the futures contract. Currently, it is trading at the year's low. In fact, it's right now it's even lower than last November low. We can see that the prices currently is at 16,622 as we are speaking. So right now the market is possibly racing towards the next major support level, which is at 16,000 levels thereabout. The area between 15,945 to 16,125 in the Hong Kong futures contract could be where the market could be heading to next as we are speaking. So in the dollar itself, we can see dollar has a bit of a minor reaction. We can see the dollar beginning to bounce. The low traded was actually last week, midweek, at 102.38, and this is giving rise to the possibility of a three-wave bounce back to test the 104.22 to 104.44 levels. This area, I think, will be a big barrier to higher prices. I suspect market will be kept around here, which may elicit another downturn below the 102.38 going forward. In the euro dollar, we can see that as the dollar rebounded, the euro dollar also come off a little bit, although on a day-to-day basis, this pullback does not have a three-way structure just yet. I suspect if there's going to be a bounce, the market will be held back at 109 levels before it extend lower. So do watch out for that. In the meantime, let's see. But by and large, if the pattern in the dollar index and the euro dollar appears to be quite different, it may not be a similar three-wave pattern, but by and large, I do expect a three-wave pullback to 106.90 to 107 level. This will be where the origin of the move started, all the way to 110.17 high. So this is a good area to actually reposition, long position for the next move upwards. In the sterling, we can see sterling, it remains very well beat. Although it has what appear to be a three-way pullback, the pullback has actually held at 126 levels. So right now, based on the structure itself, sterling appears to be in a better place compared to the euro dollar. So by and large, if you have to buy currencies, perhaps this is a better currency pair to buy compared to the euro dollars. Over in the Aussie is also pulling back from a high of 0.6691 and it's currently trading at 0.6614 thereabout. This level at 0.66 even to 0.6631 appears to be a support area. So if there's going to be any pullback, look out for at least a temporary relief for the markets in the Aussie dollars. Top side is about 0.6712 to 0.6740. Dollar Canadian may actually benefit from the rebound in the dollar, as we can see in the dollar index. So the low traded is at 134.80, and this bounce may actually see dollar Canadian bounce back to 136.30 to 136.60 level before coming under pressure again. I suspect the 134.80 will be challenged one more time if the 136.60 levels caps this run up. Okay, and in dollar yen seems to be continuing to fall, and although we do see a bounce in the dollar yen from a low of 136.23, this bounce is likely to be quite limited. At best, I think 139 is all it can do, and maybe at this current level of 147.50, it may also have problem. So by and large, this market does appears to be still favoring the downside, in my opinion, and the nearest downside support is likely to be centered around 144.5 to 145.5 levels. And over in gold market, which is a spectacular move all the way to $2,149 per ounce, and followed by just a dramatic turnaround on the daily time frame. This is what you see in the daily time frame. This is a key reversal, and prices now is back in $2,036 thereabout. Now this gives rise to the idea of where is gold heading? Is it still going to be going higher, or has it reached its peak and is about to reverse? There is that possibility, technically speaking, because of the key reversal pattern that we saw yesterday. Immediately, we probably will see some softness in the gold market, but by and large, over the medium to long term, gold is a definite buy. My opinion is lower the better, buy as it dips, and the first layer of support will likely come from $2,005 to $2,015. This will be the first layer of support, and if the market do continue to slide lower, like I say, it's even better. This is a long-term buy as far as I'm concerned. Over in silver market, silver did not go into a new high, but again, this high here at $25.91 is the highest traded yesterday. It also pulled back, but this pullback is even deeper than what we are seeing in the gold market, and definitely the market is heading towards $24.24 to $24.33, which sparked this later rise up to the high for the year. So look out for further advances in the silver market relative to gold. Over in the oil market, oil does not appear to be have found a bottom yet. The market slide back to $72.60 after a brief three-wave rally to $79.56. So there is a good possibility oil prices may continue to slide despite the supply cut, production cut by OPEC Plus on Friday. So this may actually see prices continue to drift lower. The next layer of support is likely to be happening at $66.78 to $67.47 basis the WTI crude oil. And in the Bitcoin also have a massive rally, but unlike gold, it did not pull back in any kind of key reversal pattern. Market still continue to stay at the 41,750 dollars range. The high traded was $42,419 thereabout, and immediate level to watch out will be 43,000 to 44,000. So this level is going to be the immediate level to higher prices. But I suspect over time, market may gun for 48,000 in the next not too long distance future. So by and large, this is a market lower to buy, very much like gold, but it is a lot firmer than gold compared to what we are seeing in the price action. So the first layer of support is likely to come from the 40,500 levels to 40,900 levels. This will be the first level of support. And of course, the market right now is so bullish on the digital asset space that I see prices will continue to rally all the way to the halving event, which is likely to happen in April next year. So this is all of my 2 cents worth for the day. In the meantime, you take care, and I'll come back to you tomorrow with a further update. Bye-bye.